today we are going to talk about Brexit and its impact in Indian markets. So as you all know, like for the last couple of weeks, Brexit has been dominating like the global discourse so as a key risk element, and we as an Indian equity markets are also tied to that. As such, what happens with global, events is that there is a risk of emanating from that, and fund flows affecting because of that. So today, what happened is like after the recent slew of polls, opinion polls which have come, they have like determined that the chances of Brexit has decreased considerably. The odd maker odds in Bloomberg, it has slashed it from last week's 42% to a sub 30% of Brexit happening. So as such, today right now we are seeing like global risk on coming back, which is very good for as far as emerging market economies are concerned, because emerging market as an asset class always performs whenever there is a global risk on. We as in India also we see that if this plays out, the odds which are suggesting and Brexit not happening or rather Bremen happening, we are quite shielded, because our global or rather our domestic macro has a lot of tailwinds coming in the coming quarters, and we feel that in absence of global volatile situations we will be performing very well. However, having said that, opinion polls can be quite polarizing from time to time. So in case like further negative news suddenly comes from the coming days about Brexit worries emanating again, we may again see a certain amount of sell-off. In such cases, stocks which are much more exposed to the European market, stocks such as Tata Motors, Tata Steel, Bharat Forge, and Motherson Sumi among our will be our key risk stocks in our coverage universe. And also, we all know like European Union is one of our key global trade partners. As such, we do around like 18 to 20% of our merchandise exports with the European Union, and as well as our 20% of our software exports goes there. So the currency volatility always like is a key risk for us India is concerned. Historically, we have seen that whenever there is a global risk of event, there is been a flight to quality, in which cases your key places where you shield yourself are quality private sector banks, your quality consumer stocks, and your utilities. So in case if we see again coming 2 3 days forward, your Brexit polls going in the opposite direction again, like the odds narrowing, then we'll have again be seeing some sort of a volatility. So in this context, in a volatile context, it's always advised to be in the less risky assets, but unless the trend shifts, we should feel quite comfortable in like investing in our core themes of playing through cyclicals and playing through undervalued stocks, because that is where we feel like the most money can be made this year. So this is what we feel right now at this current juncture as far as the Brexit playing out vis-a-vis India is concerned. Thank you.